Hey, what's going on, you guys? I want to welcome you back to my channel. And first off, before we get started, I'd like to wish everybody a happy new year. It's been a minute since we've made a video, and this year we're going to make more content. And hopefully this video here will bless you guys. I pray that anything that you guys embarked upon, your trading journey or anything, that you guys will be successful and that you have been successful and that this is a prosperous year for everybody. And so without further ado, let's go ahead and get into this video, you guys. So like I said, this is the first trade that I've taken in 2023. And when I tell you guys, this trade was literally like textbook. The setup was so easy. And it was like around 150 pips that I caught on this particular trade. And this was probably the easiest 150 pips I ever caught on any trade. And so I'll go ahead and break it down to you guys. So as you can see, looking at gold, on the 4-hour time frame, we were bullish. And as you can see, we got higher high, higher low, higher high, higher low. We got a little bit of noise up in here, but we got another higher high, higher low, and higher high. This is our last protected low before our bias will change if the market is turning around to go bearish. Okay, so looking at this, my thought process was we're possibly due for some sort of pullback or something like that. So from this point, you know, I was literally on the 1-hour time frame, and when you kind of look at price, let's kind of look and see exactly what it's going to do. And when we're looking at this, just understanding how price works and how the market is fractal and things like that, as you can see, we had an impulse up to this area here, and then we had this bearish candle here just broke through these short-term lows and things of that nature. Oh, I'm sorry. Had it break through this short-term low here. Okay. And so looking at this, whenever you have price that break through wicks or short-term lows and things like that, that's a break of structure on a smaller time frame. And so if we drop to the 15-minute, let's actually look at price action. So as you can see, we have higher high, higher low, higher high, higher low, higher high, and truth be told, we have a break of structure right here on the 15-minute time frame. Okay, so with knowing that, we understand that we have a break of structure. We understand that price is going to give us some sort of pullback, 50% or greater from our Fibonacci. But first, we noticed on the 4-hour that price was bullish, and as we can see, we have these major wicks, and we have this dragonfly doji on the 4-hour time frame, which is a bearish candlestick in itself. So if we look at the 1-hour, we can see also that we have this order block here, and we have this supply zone here, which gave us an impulse to a bearish, bullish, bearish, which lets us know that a bearish, bullish, bearish is a continuation pattern that's letting us know that price possibly wants to drop down. Okay, so with looking at that, with those confluences, we can see that we have a supply zone here on the 1-hour time frame. Okay, we'll notate this as our H1 supply zone. However, a lot of times when you have supply zones that are this big on smaller time frames, you have supply zones within the supply zone. Okay, because if you look at this, let's just say if we took an entry here, put our stop loss above here, you know, this is not a good risk to reward, because as you can see, this is over 100 pips. And so of course we don't want to look to that as any entries or anything like that. So we want to drop to a smaller time frame. So if we drop to the 15-minute, we can see that here we have a supply zone within our hourly supply zone that's a little bit smaller. Okay, and we can notate that as our 15-minute. Now, like we said, we want to see price possibly pull back from our Fibonacci, but we can see that price broke this last low here, so price is probably not ready to give us a pullback as of yet. Okay, so let's go ahead and play price, and as you can see, price starts to pull back a little bit on this area, because we can see that price has broken some short-term highs here, and things like that, which lets us know that we had a break of structure on a smaller time frame and price wants to turn around. Okay, so now if we utilize our Fibonacci tool from the swing high down to the swing low, any possible sales that we're looking for would be in this area here. This is our golden zone in which we want to look for price. Okay, one other thing to notate is we can see that we have this last up candle before the down move here, which could possibly be a supply zone as well. Let me go ahead and notate this as a 15-minute supply zone. However, we can see that, like we said, most entries we want to take is within 50% or greater. And as you can see, most of this supply zone is not within the 50% range. And so this supply zone literally is almost 1/4 of the way in the 50% zone. I mean, if it wicked here and come down, that's still valid. But for me, a better risk to reward would be this supply zone up here. Okay, so for me, I'm going to go ahead and delete that supply zone, and this will be the POI that I'll be looking for. And so this POI for this supply zone is usually, like I said, the last up candle before the down move. Okay, just to make it simplistic for those who don't understand supply and demand zones, when you're looking for a supply zone, just look for the last up candle before the down move. And for demand zones, you can do the same. For example, if you came down to this area here, you can look at this last candle here, notating this last down candle before the up move for your demand zone. However, we're going to stick with the supply zone here for our point of interest. So one of the things I decided to do was place my entry here, and I wanted to ride price down to these equal lows in this area here. Set this for my TP. And if we look at this, you can see this was right around 158 pips. This was like a 1-to-4 risk reward. And so I had my stop loss right above the supply zone here. And from there, let's move it over and let's watch it work. Price came up, wicked me in, and literally smashed all the way down to TP with no problems. And like I said, you guys, this particular trade was literally textbook the way it was set up. Price gave us a break of structure, gave us a pullback, gave us an easy point of interest to take this particular entry. And like I said, price easily could have, it could have bounced off this area here. But for me, I like the risk reward of this one here. If I would have placed my entry here and it would have bounced off of this one and went down, I would have been okay with that because I stuck to my principles. And so that's one of the things that you guys want to be mindful of, to always stick to your trading plan and how you trade. But like I said, this was really, really textbook. More times than not, when I get a pullback on a 15-minute, sometimes I'll drop to the 5-minute or the 1-minute time frame to actually look at entries. But as you can see on the 1-minute time frame, it gave us another confluence here. It gave us a head and shoulders pattern. Here's a head, right? I'm sorry, that's a shoulder. You had a head and you had another shoulder here. So this here is a bearish pattern in itself. And as you can see, it gave a head and shoulders within the supply zone, and then it dropped off to the downside. Hey, you guys, I want to thank you for rocking with me today. And like I said, we're going to post more videos to come. And like I said, this trade was literally textbook. Like I said, I hope this blesses someone, and I want to thank you for watching. See you on the next video.